If either of those two stocks of finance are not able to meet these claims, the shareholder is the only other opportunity to source funding from to meet these claims. It's either that or declare bankruptcy on their end. So there may well be a request from the fiscus to fund these claims, depending on how all of that comes out in the wash.
How do we begin to quantify the scale of the damage from last week's riots and looting? And will insurance companies be able to cover the firms that were devastated by the riots? Well, joining me to discuss this topic is Jonathan van Rensburg. He's a financial risk consultant. Jonathan, welcome to the CRA channel. Could you give us a sense of the scale of last week's damage?
Thanks, David. Yeah, so it's been in the news, and there's a lot of talk around trying to get our arms around how much this calamity is going to cost. You had a guest on in a recent episode, Mike Schussler, who was starting to go through these piece by piece, talking about what it would cost from a property point of view, from some of the inventory that was sitting in those shops, the N3 closures, and what a potential business interruption cost would look like. And Mike Schussler was talking about somewhere north of 70 billion as being a potential cost. More recently, RMB has been talking a little bit about an economic cost of 200 billion rand. The South African Property Association has talked about 20 billion rand as potentially being the number. And one of the important insurers in this whole debate, Sasria, have said anywhere between 3.5 and 12 billion rand as being the potential claims. So basically, we're expecting somewhere north of 10 billion. And if RMB is to be believed, somewhere close to 200 billion could be the eventual calamity.
Enjoying this analysis? Click here to sign up for our 30-day free trial for more content from the CIA.
So, Jonathan, you mentioned Sasria, the state-owned insurance company. How does that institution fit into the mix here? What role is it designed to play? And will it be able to cover some of these liabilities?
Yeah, Dave, that is the magic question. And this Sasria really goes to the heart of where insurance cover might kick in here. They're a fascinating entity because they're a 100% state-owned company, effectively set up in the 70s in response to political risk at the time. In this instance, a whole bunch of your short-term insurers are probably going to defer to Sasria and say, this is what that contract was for. Now, if you go look at your own car or household insurance and you scroll down to the bottom of that statement, you'll probably see a 5, 10, 15 rand charge from Sasria to cover these sorts of calamities. And they're an interesting one because they are effectively covering what in insurance terms they call a fundamental risk. Usually insurers are trying to manage the kinds of risks that they're willing to cover. Sometimes they're just too big in value or too widespread for an individual insurer to be willing to cover. They'd simply go bankrupt if they tried to. But Sasria, set up in the 70s in response to this very specific issue, have effectively taken ownership of this sort of challenge. So this fundamental risk, that of widespread rioting, civil unrest, everything that we saw going down in the likes of Durban and Johannesburg, they're the ones who are going to have to fit this bill.
So, Jonathan, is there a risk that Sasria won't be able to cover these losses? And if not, what are the backstops? Would they have to go to reinsurers or to the National Treasury to fulfill these claims?
Absolutely, David. So that's effectively the state of play here. Sasria they're a competent organization. They're not huge. They're probably about 5% the size in terms of assets as compared to something like an Old Mutual. They have about 9 billion rand based on their 2020 financial statements. They've got 9 billion rands worth of assets available to them to liquidate to try and meet some of these claims. And it's really going to come down to the interplay between the claims that businesses actually submit and that are considered realistic claims, and the extent to which they're able to meet those with their own assets on their balance sheet and start activating some of the catastrophe clauses with their reinsurers overseas to meet these sorts of obligations. It's a very strange event, and it's not the run-of-the-mill car ding that we'd see coming through as an insurance claim. This is the catastrophe that these sorts of 1 in 50 or 1 in 100 year events this is what these clauses are for. And they do have reinsurance contracts that are available to cover that. So they've got their own assets of about 9 billion. And if the claim is 100 billion, there's going to be a lot of shortfall left to fund. And they've got a whole bunch of reinsurance, which they would have modeled around a potential event like this. If either of those two stocks of finance are not able to meet these claims, the shareholder is the only other opportunity to source funding from to meet these claims. It's either that or declare bankruptcy on their end. So there may well be a request from the fiscus to fund these claims, depending on how all of that comes out in the wash.
And of course, when we talk about the fiscus, what we're really talking about is individual taxpayers like you and I. But now, Jonathan, what are some of the lessons that we can learn from this? I mean, I think the one lesson that I take away is that maybe insurance institutions have not properly factored into their models the risk of state failure or governance breakdown. What are some of the takeaways that you've taken from this incident?
The thing to watch here, David, is going to be how this all comes out in the next month or two. We're going to very quickly know whether those models adequately forecast the sorts of damage that happened in Durban and Joburg in this last week and a half. So we're going to know very quickly whether those quants and actuaries were taking into account the right sort of variables that have been bubbling around in our country for decades now, whether they properly modeled those events to understand the scale of the calamity that is presenting them now. And the way that we're going to know that is whether there was enough reinsurance cover that comes into that entity and whether they need to go and ask the shareholder for more money. And again, the size of that mistake could be 30, 40, 50 billion rand, depending on how all of those claims mechanics work. Now that's a few times the size of an SAA bailout. So it's something that we really need to keep an eye on.
Jonathan, what does this mean for other financial institutions in South Africa and the way they factor in risk into their planning? I'm thinking of banks, for example. How might they respond to the events of the last week or so?
Well, David, they follow a very similar sort of actuarial quant-based modeling of how this all works itself out. So they would have these sorts of professionals trying to model these potential risks and assign them certain probabilities and say, how much are we going to lose here if this is the case? And they are just as subject to the potential payouts from Sasria as anyone else in the community, because somehow those loans need to get paid. They don't want those businesses to fold because someone's got to pay back that loan. So there's almost certainly been a similar commensurate type of modeling by the actuaries and quants in those banks to ask similar sorts of questions. But again, watch the space, see who gets affected by this sort of calamity, because it may just be that the quants didn't expect this level of unrest to happen and this level of financial loss to transpire.
Jonathan van Rensburg, thank you very much for joining us on the CRA channel. Did you know that the Centre for Risk Analysis also conducts bespoke research projects? If you would like to talk to us about some of the themes that were discussed in today's video, and if you would like to work alongside us and Jonathan to help you understand the financial risks in the South African market, why don't you get in touch with us? We'd be happy to meet with you to discuss these themes further. My contact details are in the description below. Thank you for joining us on the CRA. Until next time, take care.